All right, welcome back everyone to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not too much, man. Very confusing day to say the
Yeah.
least.
The confusing week, forget the day. The past couple of days has been very confusing, man. So I think we had a pop in on Monday, and then after that, just like kind of things just slow down from there. Not a lot of crazy moves, not a lot of big moves. Not sure what the market movers are doing, where they're pouring money right now, but we'll keep an eye on certain things. But let's do a quick recap, man. Today is September 17th, 2025, the day that we are all waiting for to see what the Fed is actually going to do with the rates. Just to give you guys a quick snapshot, the Dow Jones actually did pretty good. It was at 0.6% today. S&P was down like negative 0.1%. NASDAQ was down 0.3%. The Russell was actually up 0.2%. I don't know if you guys seen that move like during the when Jerome was talking. I mean, it did some crazy. We went up like $2, $3, and then it came down. And it's like, oh my God, the volatility was insane, 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 insane. But overall, the Fed cut the rate by 25 basis point. I mean, it was predictable. I think a lot of those things were kind of factored in the market, in my opinion. I think Wale, you kind of alluded to it also in previous episode that it's kind of you feel like it's kind of already factored in there. If we would have got 0.5%, that would be a different story.
And I was in the camp thinking that we might get 50. And based
Yep.
on what Powell said, he said no one was really on board for 50. So,
Nope. Nope.
yeah,
Nope. And man, you could tell Jerome, I don't know, man. It's like his demeanor kind of is changing a little bit. I feel like he's just frustrated with the job. He's ready to go. You can just tell like he's like, I'm done with this, man. This has been the most frustrating, not even year, the most frustrating few months of his life, probably. Like getting attacked left and right, getting called names and all that stuff. So I think he's just trying to focus on his job. And I won't be surprised if he celebrated on his way out. But the uh the Fed rate actually down to target range from 4.0% to 4.25%. There's now an expectation from the dot plot for two more cuts by the end of the year. But Jerome said it's not guaranteed. So it's all going to depend on what happens in the next few months, what unemployment, inflation, and all these different things. All of that stuff has to be taken into account. Some of the questions, I don't know if you watched the whole thing, but some of the questions they were asking was like, it's like, I feel like those reporters ask the same questions, but in different ways to just
correct.
flip him a little bit. And he just like, as I said earlier.
Yeah.
So yeah, man, let me get your feedback on this Fed rate cut. First of all, another thing I was gonna say, like a lot of people are kind of like not celebrating this rate cut a lot because I think the first time we got
No,
it, everybody was like, "Oh my God, go out, buy houses, it's a good time." I feel like a lot of people finally trying to understand that those two are not necessarily tied together.
correct. And another thing I will point out is that if you look at what initially happened with the 10-year and the 2-year, they actually went down,
Yep.
but then they kind of came back up. So again, remember with mortgages, we keep reiterating this: mortgages don't move necessarily with rate cuts,
Yeah.
because the Fed policy is a little bit more skewed towards the front end of the yield curve. So shorter maturities, like the 6 month, the 1 year, the 2 year, a little bit of the 3 year. But once you start getting out the 10 year, the Fed doesn't really have that much influence on what happens at that maturity level. And that's where mortgages are definitely tied into. Remember last year, we got two rate cuts and then mortgage rates went up. Now, what
Mm-hmm.
happened recently was before the Fed even cut, mortgage rates came down to 6.15, which was its lowest level in the last 3 years. So that was before the Fed cut. Now we'll see if it stabilizes or if it moves higher, but at least right now, it's still, I think the 10 year is still hovering above 4%. It did dip below 4% briefly, but then it came back up. So
Yep. Yep.
the way I see it is, again, the balancing act between higher inflation and weak job market, right? That balancing act is going to be very, very difficult. And what I think that the Fed wanted to do is they didn't want to overdo it on the first go round. So we'll see if this 25 basis point rate cut does anything with the labor market. I don't think it will, because I still think that, job hiring and, labor supply are still
Right.
going to be issues that they're going to have to contend with. I mean, we might see 4.3 unemployment. I don't know. We might, we'll see how that plays out. Then we also got to start tracking inflation. Powell says that they want to get back to 2% target inflation in 2 years. So 2028 is their target. We'll have to see if they're on track to do that,
Yeah.
but we can't continue to see these small incremental spikes in inflation month over month. Otherwise, they're gonna have some issues, because again, you don't want to flip from a hold to cut to raise. You
The
don't want to
race.
do that.
Yep.
That is
Yep.
going to be more catastrophic than, just basically not doing anything. So I'm I wanted them. I thought they were going to do 50, because when I saw that the labor data from the last week, I was just like, ooh, that's really bad. And all
Yep.
the revisions were worse,
Yep.
right?
Yep.
So I
Yep.
thought they were going to come out the gate swinging, but they didn't. And it seems that they're going to slow play this and take it meeting by meeting. We got two more meetings before the end of the year. We have October and December.
Yep.
So I don't know. I I'm optimistic that markets won't like sell off, right? Maybe we consolidate. Small caps, I think, have the potential to run higher. We
Yep.
almost got to that all-time high, but we sold off.
Yep.
But that dip did get bought. So I think certain names will start to move higher, especially names that may have got beaten up over the last couple of days.
Mhm.
And I
Mhm.
think that, maybe we'll see some consolidation. I'm not expecting some of the big names to move, like your NVIDIAs and your Microsofts and things like that. We might start seeing a little bit more money start to flow to small caps. So I'll be watching
Yep.
that.
Yep. I know we'll talk a little bit about Nvidia later and why they kind of dropped a little bit, but I want to go back to the comment about unemployment. I think, and somebody asked Powell in the conference, like, does he consider AI to be a contributor to most of the employment? I found his answer was kind of interesting, and I was like, oh, I kind of see what he means. Basically, what he see what's happening right now is there are not a lot of layoffs, right? So those people who might not have jobs or even like new graduates and all this stuff, you know, they're not able to get new jobs, right? The hiring kind of like slow down completely. One, because companies are not hiring. They pretty much a lot of companies put freeze on hiring. But at the same time, they're not even laying off a lot of people anymore. I think we see a lot of layoff maybe like toward the end of the last year and then the beginning of this year. But after that, you haven't really heard about like big layoffs anymore,
Correct. Yep.
right? So there's no movement, there's no space to move. So there's not a
It's
lot of
kind of,
layoff,
yeah.
right? There's not a lot of openings, right? So and now you have influx of people who don't have jobs. Then you have new graduates, and on top
Hmm.
of that, you add the immigration policy. So it's like, yes, we might have a lot less labor force out there, but there's no way for this other labor force to find a job to go to. So,
Yeah.
and he mentioned that AI is actually not a big contributor. He doesn't think so, but he probably thinks like it's probably contributing maybe a little bit to the why there's a labor shortage and stuff,
I was
or hiring
listening
shortage.
to Open Door CEO talking about they don't need that many people to run the company. And
I mean,
I wonder if they're gonna do a massive layoff, because let me actually read the quote. Somebody sent me this week. He says there's a 1,400 employees at Open Door. I don't know what most of them do. We don't need more than 200 of them. It's gotten easier because of the advent of
yep,
AI and technologies. This will be a simple problem.
yep,
So I'm assuming that they might just start laying people off.
mm-hmm,
And
mm-hmm.
because I know that, his goal is to kind of just gut the whole company and basically start from scratch.
Yep.
So
Yep. And a lot of companies are probably thinking that too. It's like
yeah,
if you can automate a lot of stuff. I mean, if you think at Open Doors business model, they want you people buy a house to closing and everything online. So you don't really have to like have somebody who's gonna go around with you, show you the houses or all the stuff. Everything you do online. You want to sell your house, go online, post it, they'll do all the posting for you, they'll do all the selling for you, you just get the check, right?
yeah,
So in that business model, I can see why. Because you don't
yeah.
really need salespeople, you don't need it almost remind me of Carvana. If you guys ever bought a car, Carvana is like the same
Mm,
model. The only thing with Carvana is like you have to deliver the car, right?
correct.
In some instances, but I mean it's the same model where you go online, you order your car, it gets delivered. bam. You don't need people sitting in sales places and trying to sell your car, or you don't need a lot of overhead. You don't need a lot of manual labor. You could
Yeah.
probably contract with somebody locally to deliver the car. So it's like now you're cutting even more costs. So
Hmm.
I could see in that case. So yeah,
We'll see.
I
We'll
I
see.
think a lot of companies are gonna do that, honestly. I think a lot of companies, if they can get away and do automation, I mean, investors are gonna be happy, and people who invest in those companies, because that's more money in their pocket. So
Yeah.
yeah, it's gonna be interesting, man. Another thing that I saw that was interesting, Lyft. I don't know if you guys paid attention to Lyft. Lyft was up like 13%. They had a new partnership with this autonomous ride hailing in Nashville. So it looks like they are trying to jump into that market also with Uber, alongside Tesla
Ooh.
and Uber too. So it ran up like from the get-go. As soon as the market opened, it just popped.
Oh, yeah.
So
That was a big gap up
yeah.
from 20. They closed at 20 to opened at 20. The high was 23. Sheesh. Man,
So again,
I had no idea that Lyft was like a $90 stock.
yeah, Lyft was up there. If you remember, like back in the day, I think Lyft was more popular than Uber, but Uber came and Uber started adding more stuff. They start adding more stuff. They start going to like the not just the delivery, but they also do food. They also do other stuff. Lyft
Mm,
kind of just stayed within the delivery market. Like, we
yeah.
just want to be able to take care of people. So,
And I think Lyft only operates in the Americas. They don't do
yep,
Europe. They don't do
yep.
Africa. They don't do.
Nope.
Yeah, that's
Yeah,
true.
they have a lot of growth opportunity, but Uber's just been taking over, man.
Yeah.
It's been taking over. Um, I'm trying to see what else we have here. Workday also kind of went up too. They went up by 7% after activists from Elliott Management disclosed a large stake. Somebody bought a large stake in there in Workday,
Yeah, I think
and that's
I heard about that. Yeah, they were up like 9% today too.
yeah, yeah,
Also, too, gold hit an all-time high.
yep. Oh, and that's man. I feel like we talked about this. I'm like, keep an eye on gold. The higher gold goes, we are not in a good place. You know what I mean? If people keep buying gold, something is happening in the market. Money is leaving the stock market somehow, you
Yeah,
know?
yeah.
So,
And gold is typically a defensive
yes.
commodity. So the fact that the market is running and gold is running is usually not very common. And I actually heard somebody on CNBC today, I think Jeffrey Gundlach was saying that he wouldn't mind putting 40% of his portfolio in gold. And that's crazy. That's crazy. Like usually as advisors, we never, ever, ever, ever even allocate that much money to gold, ever. Like, so
That's crazy, man.
when I heard that, I was like, ooh. But yeah, he said gold might hit 4,000 by the end of the year.
I believe it. I believe it. The way it's been running, I really, really believe it. But on the other side, this is actually a really, really good problem. If you're an investor or a trader, when gold start to drop and money start leaving gold, you know where money is going. So
Yeah,
just keep that in mind. There's a lot of money going into the gold right now, but when gold start coming down a little bit, you start seeing like those two downs, weekly, monthly, the higher time frames start like turning bearish and stuff. I think money will be moving back to the stock market, but we'll talk
yeah,
about it when the time comes.
yeah. But yeah, gold has been on a tear. It
It's been
has
on a
been
tear,
on a
man,
tear.
and it's been crazy. All right. So next, I know we want to talk about Google joining the 3 trillion market cap for the first time. And it's only the fourth company that ever does that. I think Apple is one of them, Microsoft, and Nvidia. So those are the only ones that hit that $3 trillion market cap. So what are some of the triggers for that? I think we've kind of seen a couple of them already, like the antitrust ruling, regulatory risk.
Yeah, that was a big
Um,
hurdle to get over.
that was huge, man. Especially with the Chrome and not having to divest from it or not having to sell it. That's a crazy win for them.
Hmm.
Um, as they have a lot of AI momentum and cloud growth. But year over year, man, the stock has been going up. So let's talk a little bit about that, man. What are your thoughts on that?
Yeah, Google has a very diverse business model. And one of the things that, when I look at them, now the only issue that I have is I always keep asking people this. I've never seen anybody with a Google phone, like the Google Gemini phone. I have not met one person with a phone. So I don't know how well that part of their business is doing, but from a software standpoint, like the YouTube acquisition, genius, right?
Genius.
It seems like they're not going to have any issues with search. That whole antitrust thing seems, to be gone.
Yep.
And then just all their hands, and all the data that they're probably collecting, I'm sure that's worth something.
I mean,
So,
years and years and years of
I mean,
data.
all the data they're collecting probably helps them with search. So if you're a business and you're trying to, be on the top of the SEO, chain and all that stuff,
Yep.
I mean, they are really killing it. So, yeah, shout out to Google, man, because I mean, I thought that they were going to run into some regulatory hurdles
Hmm.
after Congress kind of got in they pockets, but then coast is clear now, seems for it.
Coast
So
is
we'll
clear.
see, unless
Coast is clear.
if we get a new administration and then kind of bring back the old stuff. But
Ah, that's actually a good point, man. If this administration or if a new administration comes after this, a lot of those things are gonna be undone.
they might change.
It's,
They might change again.
yeah,
Yeah.
yeah,
So
man. You're gonna see a lot
well,
of people changing side again. So
yeah. Shout out to Google for making it to the $3 trillion group. So we'll see. I think Amazon hasn't quite got there yet. I don't
not
think
yet,
so. Not
not
yet.
yet. They're probably
No.
next on the block though. Like they're definitely up there next.
Let's
You
see
know,
what Amazon's market cap is right
them
now.
and then Meta also. Meta needs to make it up there.
Yeah. Let me see. Amazon market cap is okay, 2.4 trillion. So
Mhm.
they getting close.
Yeah, yeah, yeah. But yeah, man. I mean, I think they're on a good track right now, and I think, like you said, like the coast is clear for them to be able to like even go further. So if you are an investor in Google, you're doing good right now.
And also remember, Google is playing in the quantum space too. They're working
Yep.
on the quantum. So
Yep.
if we look at some of these quantum names this week, the IonQs and the
Mm.
QBTS and
Yes. Yep.
QUTB. I mean, I don't know the symbols, but some of those names ran
Yep.
this week.
Yep. Yep.
So, and I would not be surprised if Google maybe acquires one of them.
I mean,
So,
that's the easiest way to start growing that side of the business too. So,
yep, exactly.
um, oh, on a side note, I wonder what IBM is going to do. IBM is supposed to report next month, so I'm going to keep an
Mm.
eye on them.
Yeah, IBM is, I think they have good ideas, but their execution has always been
It's
the
always
issue.
been sucky.
Execution has always been the issue because remember, they basically were the first company to me to really break into that AI
AI, yes.
marketplace with Watson.
What? Yep.
And that whole whatever happened with Watson just never really panned out.
Yep.
But
They
I know
didn't.
they're go ahead.
I was gonna say they didn't. They probably didn't have good people to market it or to
Yeah.
to to get it to the next level. Yeah.
Yeah, the execution was bad. And then what was I gonna say? Uh they're working on quantum too as
Yep.
well.
Yep.
So we'll see. We'll see.
Hopefully they get it right this time. Hopefully they stick with it this time.
Yeah.
So we shall
So
see. We shall see. Let's move on to China, man. China been making some moves. China,
it's China.
China's CAC, China's internet regulator. It's called Cyberspace Administration of China. They reportedly ordered all of major Chinese tech firms, like, y'all better not buy nothing from Nvidia, right? If you guys ever go to Netflix, there's a really, really good show on Netflix. I forgot what it's called, but there is a software that was built back in the days by the US government, by a firm here in the US. And then that software ended up being embedded, or a lot of countries end up buying that software. What people didn't realize is the guy who built the software built also a backdoor. In the technology world, a backdoor is a door that every developer leaves open in case they need to go in and do some modification or anything like that, right? But that backdoor was exploited because the government of the US ended up able to spy on other countries through this software. Anyways, go look it up. It is a true story. So now you see why China is concerned about buying chips from Nvidia. You know what I mean? So they are saying companies like Alibaba and ByteDance, which is kind of strange for me because ByteDance is the company that owns TikTok, right? But TikTok is just now being sold. Like 80% of TikTok is being sold already to like Oracle and some other companies. So what does that mean? You know? So again, in your opinion, like how is this? We saw Nvidia gonna drop a little bit today. How long is that gonna impact Nvidia? I don't know. Is China one of their biggest buyers for the new? Because I know they buy the old version of the older model. So I don't know if that's gonna impact them at all.
Yeah, I will say that if their China revenue goes to zero, right, that's gonna hurt, like whether they like it or not. And I know Jensen Huang is probably gonna try to talk to them and kind of, you know, do what he needs to do to kind of keep that business flowing. But Alibaba was trying to tout that they're making their own AI chips, and they're probably going to be want to probably want to be the main supplier to Chinese tech companies.
Yep.
So we'll see how it plays out. I will say this: if China completely blocks it and says, "Okay, don't buy Nvidia chips," they're going to get hurt. And how they're going to make up for the revenue or where they're going to make up for the revenue, I don't know. That I can't tell you. But because remember they ran into this before when Trump tried to block sales to
Yep.
China.
Yep.
Then Jensen was like, okay, we'll give you a piece of the pie. And Trump's like, okay, you can sell to China.
Right.
Now China's blocking the direct sales now. So
Yep.
I don't think it's good for their business. It's going to hurt their valuation.
Absolutely.
Um, but
Absolutely.
maybe they find another country to sell their chip to. I don't know, but that I know China's not a huge piece of their business, but it's enough to where it could put a dent
Yeah. It's
in their
about 13,
overall
it's
value.
about 13%.
13%. Okay, so
Mm-hmm.
that's a pretty good chunk, almost
Yeah.
15%. Yeah.
Yeah. But yeah, I mean, I found it interesting, man. So we'll see what the long term impact on that is. But I
Yeah,
mean,
the speed at which Nvidia has been going is it's really starting to like level off a little bit.
yep,
Not saying that they're a bad company, but right now they're not growing at the pace at which they were moving like 2 years ago.
yep,
So whether that reaccelerates, whether that kind of starts getting a little bit, passive, we'll just have to wait and see. But still a good company though. Just I
really
don't
good
know if I would
company.
be a buyer at this particular price, is what I'm saying.
Yep, yep, yep. But yeah, we'll keep an eye on them and see where they go from here. But before we move on to our stock review of the week, I want to shout you out, Wale, man. OKLO hit 95, 96.77 today. Yo,
You
I'm
know what's
telling you,
funny?
man.
I forgot to put that in the notes for today completely. But
I was looking, I was
um,
like, wait, why did they put that in? But yeah, man, that is some crazy, 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 crazy move, bro. Like,
yeah, we hit a new high this week, and there is, I think, what did they say? The U.S. is trying to now build a uranium reserve. Is
yep.
is is what I heard.
Mm-hmm.
And if you look at CCJ yesterday, or was it yesterday, or I think it was might have been Monday. CCJ and all the uranium names
Gone.
were just went parabolic.
Mm-hmm.
So we we were we were early to the party,
Very, 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 very early.
and
Very early.
it has paid off. Let me see what OKLO. Let me see the percentages. So this is my position on OKLO, and we have got my leaps. Yeah, up 1,473%
Eesh.
with a cost basis of I think still $6.11.
That's crazy.
Crazy, crazy.
That is crazy.
And I will,
I
I'm,
took few profits, so my cost base is gonna went up a little bit, but I took a
yeah,
lot of profits back in the day. That's
yeah.
crazy though, man.
I think I might have to rethink it. I have a sell limit order for $100,
It's and he's gonna hit that.
and I think
We're only $4 away.
yeah, and I think it's getting close because in the after hours it got up to 98.60,
Yep.
but it didn't get there in the regular market. So I'm definitely gonna sell some when it hits 100 for sure.
Yep. Yep.
But yeah, OKLO has been one of the best performing stocks this year and this week. I mean, I'll be honest with you. Like I said, I did not think we would be here
I
this
mean,
fast
we thought what 3, maybe 4 years? Not even a year.
because I just said
Crazy.
regulation is going to be a huge hurdle.
Yep.
Well,
Not even a year later.
I was wrong, and I will admit I'm happy that I was wrong.
Yes. But yeah, man, I just want to say shout out to you, man, because that was a spot on like analysis. We did the breakdown back when we used to do Instagram shows and stuff. Like that was spot on, man.
Yeah,
So I don't know where we're
yeah,
gonna go from here, but at least
yeah.
we know where the trajectory of the next 5 to 10 years is gonna be. It's gonna be on energy. It's gonna be on making sure like things are taken care of. So
Correct. And I will keep saying this again, as long as the blue I won't say the blueprint, but the game plan as far as going live with their first product in 2027, as long as there's no hurdles with that, to
yep,
me, I think that things will continue to progressively move higher. Now, I will say this. If you looked at the stock trade, every time it makes a new high, there's usually a pretty substantial pullback.
yep, people selling,
And
yep,
yeah, and I think that that's just going to be normal. I also think that institutions are starting to get pay attention to OKLO now
yep, yep.
because Bank of America just jumped on as one of the analysts that is covering the stock, and I'm pretty sure a few more are probably going to jump on because there's not that much institutional coverage of the stock just
Of
yet.
the
But
actual
once it
stock.
starts
Yep.
to get more traction, I mean, I don't know. I mean, if this is a $200 stock in like a year or two, man, I
I
would
would not be
be
surprised though. I
I would
really would not be surprised.
I will be geeked. So I'm just really just waiting for this whole thing to play out. And one of the things that I'm doing as well. So this is another thing I will suggest. So if you don't want to sell your entire position, right? And I got a low cost basis at $6.11.
Mhm.
One of the things you also want to do is after a big move like this, maybe you raise where your limit order, your stop
Yep.
order is.
Yep.
So right now, I think I had it before when it was trading around 80, I had a stop order around like 65. So basically what happens is if it drops to 65, I'll sell a good chunk of the position.
Hmm.
Now I'm probably going to lift that to maybe like 75. So if it drops to 75, then I'll sell. Now, again, will I be mad if I could have sold it at 95? Obviously, but this is a position that I plan on holding.
Yep.
Another thing you can probably do is if even if you do sell the entire stock position, maybe you can also go long and use leaps to stay in the
Leaps.
position.
Yep.
Yeah. So I
Yep.
think what I'm probably going to do is maybe take some profits and then maybe reinvest in some leaps
Yep. Yep.
that are going to
They
be,
just opened up the 2028 leaps. So I
ooh,
mean
okay.
2020 or 2027. Hold on, let
Probably
me see.
2028, probably 2028. Because leaps usually go up almost 2 years, two and
Yep.
a half years.
Yep.
Yeah.
So January 2028 just opened. So
Oh, okay.
there
So,
you go.
yeah. So I don't want to get out yet, um, you know, but at the same time, you have to be prudent with your risk management. So
Absolutely.
yeah, if we get to 100, I'm definitely gonna sell some stuff.
Yep, yep, yep. But yeah, man, I wanted to do a shout out to you because that was a really, 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 really good play.
Yeah.
So let's move on to Hood, man. I know you want to do some analysis on Robin Hood, so let's go and do a deep dive on that one and see what's happening there.
Yeah, so I chose Robinhood for a couple of reasons. One of the reasons is because obviously I asked people to send me who they wanted to go over. Robinhood was one of the names that I wrote down. And then Robinhood got added to the S&P 500. And if you look at Robinhood's history from IPO, it was not an easy road to where they are today. So, one of the lessons I want to tell people is sometimes unprofitable companies are not bad investments. because Robinhood was unprofitable for quite some time. I think when they went public, they might have had like maybe a quarter or 2 quarters of profitability. But then after the IPO, because it was so expensive, they were not profitable for a long time. And one of the things that you need to do in order to get included into the S&P 500, you have to be a profitable company. You can't be unprofitable. So them getting included is a big, 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 how should I put it? It's a big step in the right direction. So don't always be afraid to see a company that's not profitable and say, oh, I don't want to invest in it. You have to do your due diligence and say, okay, is there a path to profitability? And the way Robinhood has evolved over the last couple of years has been pretty, I give them credit, has been pretty tremendous. So let's jump into Robinhood and we'll go into the details. So let me find my screen. All right. All right, perfect. So we're going to talk about Robinhood. This is our stock analysis. The symbol is HOOD. And let's talk about their business model. So Robinhood is a financial services platform. They provide commission-free trading in stocks, ETFs, options, and crypto. But how do they make money if their trades are free? So they have a system called payment for order flow, where market makers pay them for executing orders. As they get orders into their database, they send them over to market makers who pay them a fee. I don't know what those fees are. Didn't go into that much detail, but market makers are one of their biggest revenue sources. Margin investing. So again, they loan money out if you want to use margin to make trades. They loan money out on that, just like any other person like Schwab, TD, things like that. Interest on uninvested cash. Robinhood Gold subscriptions. I think Robinhood Gold is what, $50 a year for subscription. So they definitely get money through that. And then crypto transaction fees. So I think that when you buy crypto on Robinhood, they get a piece of the spread when you make those transactions. So it's not a commission, but they get a piece of the action when you make those transactions in the crypto market. Let's go to their customers. So basically, their customers are retail investors like us, individual investors. They don't deal with institutions. So that is one of that is probably their only and biggest revenue source. And a lot of first-time traders or first-time investors. I like Robinhood for first-time investors because the platform is so easy to navigate. It's easy, it's very user-friendly to execute, to get in and out of trades. So I like that for Robinhood. My only issue with Robinhood was sometimes the trade execution was not always the best. I will say this though, it has gotten better. I will say it has gotten better, especially if you're moving and trading very liquid stocks. If you're trading unliquid stocks or trading unliquid options, it can be very sketch. But if they're very liquid, like the Apples, the Amazons, the Nvidias, the AMDs, the execution is actually pretty good. Um, Again, we talked about their revenue and they're their competitors. Charles Schwab, or Thinkorswim, Fidelity, TD Ameritrade, E-Trade, Webull, Public is another one. SoFi is another platform where you can buy stocks as well. And then also to Cash App, you can also buy stocks as well. Robinhood, in my opinion, is probably the best user-friendly of the ones that I see here. For more of the sophisticated investors, I think the Schwabs and the Fidelities, they kind of cater to those people. Um, Public is actually one that I really, really like. I like their platform and like what they do. But that is, to me, I would say Public is better if you're a buy and hold investor rather than a trader. I think Robinhood's better for traders. Public, I really don't like it as a trading platform. I like it for more of a buy and hold, but that's just my opinion. Anyway, let's jump into their revenue growth. So 2019, $278 million. And then that jumped into 2020, mainly because of COVID. People got bored. There was nothing to do. A lot of people jumped in the stock market. Lots of volume with all of the volatility because of COVID. They made a killing. 959 million. They almost doubled that in 2021 to 1.82 billion. And then that went down in 2022. I would not be surprised if a lot of that had to do with the IPO, because I think they IPO'd in 2021. A lot of that cost probably ate into their revenue for the year. Got back to 1.86 billion in 2023, 2024 at the end of the year, 2.95 billion, and then their trailing 12-month up into this most previous quarter that they reported, they're on track for is 3.57 billion. So that's actually pretty good. So we'll see where they end the year, but the revenue growth has been tremendous with Robinhood. Now, profit margin. So again, small profit margin in 2020, negative profit margin in 2021. A lot of that probably had to do with the IPO costs. Now, I will say this: look at the trajectory of what happened. They cut it down to minus 75 in 2022, minus 28 in 2023, and they finally turned a profit in 2024 with a 47.81 profit margin. That's actually really amazing. Then in 2025, at least for the trailing 12 months, 50.13 profit margin, which is really good. So you can see that they dug themselves out of a pretty substantial hole in 5 years. And when you see companies that show you a path to profitability, might be worth taking the risk on that company, you know? And if you look at that jump from 2022 to 2023, from 2023 to 2024, it shows you that they know what they were doing with the business. They had a goal in mind to turn profitable, and they executed very, very well on that. Free cash flow. So not a bad free cash flow company for a company that's relatively small. So 1.85 billion in 2020. It went negative in 2021. Obviously, a lot of that probably had to do with the IPO. Negative 800 million in 2022. Positive free cash flow in 2023. Slightly negative in 2024. A lot of that probably had to do with some of the reinvesting they were doing into upgrading their platform, because now they got a real robust platform now when it comes to trading on the desktop. And then 2025, it says that they're trailing 12-month 4.54 billion, which is not that bad. So pretty good cash flow. A small company like them, I wouldn't expect a lot of free cash flow, but it seems Robinhood seems to be doing pretty good on that front. PE ratio, this is not a cheap stock, not a cheap stock. So 60.38. And when you compare it to their peers like the Schwabs or the Morgan Stanleys and some of the other discount brokerage firms that have other businesses, Robinhood's a little bit more expensive than them. And their forward PE, 65.39. So you're paying a pretty hefty premium to get into their business. But the growth that they're seeing in their platform might warrant that they do, maybe grow into that PE ratio. Now, this is one of the things that I liked about Robinhood when it came to their business. Total assets, 26.8 billion. Total liabilities, 8.21 billion. So positive net assets. So they got equity of about 7.79 billion, which is good. But if you look at them as a small company, they're not highly leveraged, which is really good. They've got $13.01 billion in debt, but they can basically pay off all their debt with how much cash they have. So again, that's a really good thing for small companies, because sometimes small companies, they borrow a lot of money to grow. And that sometimes can be detrimental to the long-term trajectory of their business, especially in a high interest rate environment. Robinhood seems to have navigated that really, really well. And the fact that they have more cash on hand than debt, to me, is a really good sign of good management. Because again, if they waked up one day and was like, all right, let's just get rid of all our debt, they can do it. And they'll still have about $6 billion left in cash, which is a really good thing to see on their balance sheet as a small company. Operating margins, very similar to their profit margin. So again, very small in 2020. 2021 was negative. 2022 got less negative. 2023 got less negative. 2024, they turned positive, and they're trailing 12 months so far up to the last reporting quarter, about 42.56 operating margin. So again, very good profit margin, very good operating margin. So those would be the numbers I'd be looking at to see if they continue to grow along with their revenue. And if they do that, to me, this is a company that can continue to push higher, because they've got credit cards. Because when they first started, it was just trading options, stocks, ETFs. Now they've got credit cards. Now you can do retirement accounts. Now you can do crypto. Now you can do joint accounts. Now you can do portfolio. So they've got managed portfolios in their platform now. If you want to invest in a managed portfolio through Robinhood, they've got that on that platform now. They've got the whole desktop trading platform now that's a little bit more sophisticated than what it used to be. So they've reinvested into the company and have been able to scale at a really tremendous rate. And I'm thoroughly impressed with them. Market cap, $105 billion market cap so far. Price to sales, 29.8. Price to book, a lot of when you're looking at financial companies, price to book is a number that a lot of people tend to bring up, which is why I put that in there. So 12.92. So they've got high growth expectations. Some of that is already priced into the stock. Valuation remains rich compared to their peers. So again, their comparison is to a lot more bigger companies, right? So like Morgan Stanley, Bank of America, Merrill Lynch, all the other discount brokerage firms that charge commissions. Those are their competition, but they have slightly different business models. I also think that you can get a mortgage through Robinhood if you're a Robinhood Gold member. So I also think I saw that as well. I think Shane, shout out to Shane again, was the one that pointed that out to my attention. So consensus is a buy, even though it is a rich. I saw a couple holds, but for the most part, most people are saying that Robinhood is a buy. But yeah, definitely a good business. This would be a name that I would put on my list if I see a pullback, just to see if there is opportunity to, jump into that stock. Because again, they're probably one of the financial companies like SoFi as well. Maybe I'll do SoFi next, where there's a lot of growth potential to the
Yep.
to the stock. So
Yep.
because
Yep.
some of these bigger other names, they're not hyper growth companies like Bank of America, Wells Fargo and all that stuff. So Morgan Stanley, different business models, but and then Robinhood just caters all retail, no institutional, no investment banking, no lending like mortgages or business loans and things like that. So
Yep.
we'll see
Yep.
how they evolve. But yeah, so far, kudos to Robinhood. Kudos to Robinhood.
I mean, if you were back in 2020, 2021, all you heard was Robinhood. The UI was very easy. It
Yep.
seemed like they understood that people just need ease of trade. You need to be able to trade with a click of a button, one, two, and you're in the trade. You know what I mean? And they made that easy for people to understand, especially
Yep.
with the options market. And now they added futures, like and they have
Futures too
crypto.
now. Yep.
Yeah,
Futures
and they
now.
have
Yep.
crypto, and you can try SPX and all these different things in there too. So it's like they are able to understand what a retail traders are looking for, and they capitalize on that. You know what I mean? So if you're really really good on being consistent and being like patient with Robin, you can turn a lot of money in there. Shout out to Aristotle. Aristotle has, I think he showed one of his account. He has like over $1 million in one of his account on Robinhood. So you can really like run up some money on Robinhood. Now I agree with you though. It's like the day trading on there is a little tricky. You know what I mean?
Yeah. The
So
execution, because this is what I do sometimes. So
yeah.
I'll go on Robinhood and I'll go on Thinkorswim and I will make the same exact trade on both platforms. And usually, Thinkorswim executes at the price that I'm asking for. Robinhood tends to have a little bit of trouble. Like I have to go
Yep.
put in like multiple orders.
Multiple times. Yep.
Now, Thinkorswim charges a commission per options contract,
Yep.
and that can get nasty.
Yes.
That can be a lot of
Yes.
money.
Yes.
So, I be telling myself, I'd be like, man, I look at how much commission I paid this year, and I'm not happy.
Mm-hmm. Mm-hmm.
And I'd be thinking, I'm like, man, maybe I should just move to Robinhood and just bite the bullet on some of them spreads. But yeah, I
Yep.
like Robinhood. If you're a first time investor, you're a buy and hold person. I really think that Robinhood's a good platform. Now, the one thing I do like about Thinkorswim though is that you can buy mutual funds on Thinkorswim. Like if
Yep.
you're not a trader and you want to buy mutual funds, you cannot buy mutual funds on Robinhood. Now, some of
But I
these
think it's a
mutual
matter of time, honestly. I honestly think
maybe
it's a matter of time. Yeah.
Maybe. Now, the one thing I will say though, sometimes mutual funds they might have an ETF version of their mutual fund. So if you
Yep.
can if you can find that, then you can trade it on Robinhood. But
Facts.
sometimes that's not always the case. But it does cater to your average investor. Really easy platform. And if I'm not mistaken, I mean, I go back to this chart. I mean, this thing was a $6.81 681 back in 2022.
Yep, they dropped pretty much a
Yeah,
lot.
they struggled in 2022, but the last 3 years, the inside year on 2023, and since then, liftoff. So yeah, great. A real great story, in my opinion, as far as being able to execute and evolving over time.
Yep, yep. Yeah, and like I say, they understand the younger generation of that's want to
Yes.
trade, and
Yep.
people are growing with it. So, and I always recommend it for if you starting out trading and you want to be excited about trading or even investing, Robinhood's a good place. And then once you get really good, then you can move into like the more seasoned one, like Fidelity or Thinkorswim or something like that. But Robinhood is a really good place to just enter and be able to learn things a lot quicker.
Yep. I agree.
All right.
100%.
That was a good breakdown, man. I didn't realize like Robinhood has actually come up this much. Like it's crazy to think back when the first IPO that dropped like crazy, and then now it's like 118 dollar stock. Like
Yeah.
that's amazing.
Getting included in the S&P 500 to me is a really big thing. And the thing about that is, to me, it only took them what, 4 years?
4 years.
Only took four
That's
years.
that's very quick.
I think it took Tesla like a while before they got added to the
Mm-hmm.
S&P 500.
Not just Tesla.
So
A lot of stocks that got added recently. They've been around for a long time.
yeah, I think Uber, I think
Mm-hmm.
took a while as well. So,
Yep.
you know,
Yep.
that's a really good thing to show that, hey, we went from deep negative as far as not being profitable to being profitable.
Being
So
very
remember
profitable.
we talked about APLD last year, that they're not a profitable company yet, right? You know, but their business is very capital intensive. That's another thing.
Right.
Turning
Right.
around a a, a company that invests heavily in like real estate and stuff like that, they got to borrow money and make that happen. So, but if they can sign these long-term leases and, you know, give out good projected revenue where they've got a lot of commitments,
Mm-hmm.
maybe they turn it around. APLD hit $20 today. So
Yep. Yep. And he's moving.
yeah, it's moving. So and
So
that's a
keep an eye on that one too.
yeah, that's definitely one to keep an eye on, that hopefully if they can execute properly, we could see another company start to really, really move higher in that trajectory. Another stock that we talked about on here on on August 6th, we talked about ASML.
So look at
Boy,
that.
that so remember we talked about ASML. ASML has moved like $100 since we talked about it.
Yep, because it was around six some. No, it moved almost $200 because it was around six something when we talked about it.
Oh wow.
Yeah, it was
ASML.
around 680.
I remember we talked about it. Oh yeah, it was around $600.
Yep.
Yeah, ASML, we talked about it on August 6th. Now it is trading at
Yep.
$881. I definitely missed that. I did not get in.
Yeah. It definitely moved a lot since we talked about it. God dang.
Yeah,
But again, those type of like breakdown that you do is really, really important because one, I want people to pay attention to what numbers are you paying attention to, how you analyzing like um the cash to debt ratio and understanding how does that impact the company. And just because the company has a debt doesn't mean it's a bad thing, like
correct.
understanding those nuances that people can kind of pay attention to and stuff. So
Yeah,
hopefully people can watch this and just take it back and be able to apply it to any stock they're looking at. It doesn't have to be
yeah.
the ones you're just looking at.
And you
So
see, I look at the same numbers with a lot of these companies. So
yep.
I want to look at consistent revenue growth. I want to see consistent profit margin growth. Operating margin growth is very, very important. Look at debt to equity ratio, um, PE, that's more so valuation, but I want to look at the numbers under the hood that tell me about the business, right? So is the
Mhm.
business doing well? And if the business is doing well, right, then again, we always buy stocks based on what you're going to do in the future, not what you
Yep.
did in the past. So as
Yep.
long as that continues to move in the right direction, I think that that's how you really do your research and look at whether these are good companies or not. So yeah,
Yep. So moving on next week, or not next week, this week, Thursday, tomorrow actually, we have the weekly jobless claim. So let's see how that looks like. I mean, that's another number that's very important to keep an eye on. I think that's the only big number we have coming up.
Yeah, we had
Yeah,
retail
before.
sales this week that actually came out better than people expected. I
Yeah,
think,
I
yeah,
was
I was
surprised.
surprised. I was surprised.
Like y'all here
Um,
buying stuff? What money? What money you guys are using? But
yeah,
people buying stuff.
yeah, I was actually really surprised. So,
People still shopping, y'all still out here shopping at Lululemon and stuff. So, oh man, but yeah. Other than that, I mean, we have. I'm trying to see next week. What do we have next week? We have. It looks like we have another retail sales coming up next week for last month.
PCE is on the 26th,
Yep, PCE is coming up also.
and then GDP on the
PCE.
25th.
So again, some more important numbers also coming up. So we'll see. We'll see.
Yeah,
I think we have wholesale import export next week also to see how that numbers looks like. Inventory is also coming up. I mean, some of these are like the regular numbers. I don't know how much is they're going to move the market for next week, but it might
yeah,
be a quiet week next week unless if somebody say something.
yeah.
We might not see.
Today was the big hurdle. We kind of
Yep.
got past that, so everything kind of went as expected. But yeah, 25th and 26th GDP. I think that's the third estimate, and
Yep.
then PCE 26th on Friday next week. So
Mhm. And remember, September actually there's quite a volatility anyways with quad witching and all these different all these different things. So just be patient out there, and let's
yeah,
see what this last quarter looks like, and let's
yeah.
hit it out the ballpark, man.
And I will also say this as well, if I just want to put this element out there. So, right, this is why I don't read too much into seasonality. People always say, "Oh, September is supposed to be a sell
Mhm.
off." We're up in September so far.
Very.
Like we're up in September. So that's why I said don't always read into seasonality much
Mhm.
because every month there's a different environment that the market is operating in.
Yep.
And we're coming off an earnings quarter where the earnings were really good for a lot of the big companies. We also could be in a rate cutting cycle because we got our first rate cut today. We'll see what happens tomorrow and how the market reacts. But yeah, man, my big thing right now with small caps, man. I need the small caps to start moving a little bit because if I'm not actually no, this is for the month. Let me I'm looking at futures. Let me pull back a little bit and look at the last 4 years. Okay, so I will say this: small cap futures made a new high today.
Uh-oh.
Uh-oh. So let me go to max. Yeah, small cap futures made a new high this month. And if I look at IWM closed at 238.89. It's trading at 239.62. We are getting very close to that all-time high of 244.98. So
Yep.
let's see if small
We we
caps
we we
can
wicked
go
through
on.
it today. We wicked through it
Yeah,
real quick, and we came
yeah,
right back down. So
yeah. 244.28 was the high today on IWM. We were within like almost 30 cents of that new high, but
no, we definitely took some stops today. We cleared some stops up there. So I won't be surprised if the next couple of weeks we see this move a little higher.
yeah. So,
Crazy.
yeah.
Yep. With that being said, man, that's it for this today's episode. We covered a lot of stuff today, from rate cuts to we highlighted some sectors. We talked about Robinhood. Talked about a lot of stuff today, but remember, man, markets are always changing. So the only way you can keep up with it, you got to stay informed. And this sometimes there's a lot of information out there. So again, we always say this: we try to bring you guys the most important ones and just hone in and on the ones that that you should be paying attention to. So we try to help
Correct.
you kind of organize that craziness and the messiness that's going in the market. So we
Yeah.
are
Try to
here for
sift
you all.
sift through the weeds.
Yeah, because there's a lot of information getting thrown at you. And sometimes you want to focus on everything at the same time. So we're just trying to help you all just kind of stay focused and all this stuff. But again, Thanks for tuning in. If hope you guys enjoyed this breakdown today.
Let me give you one thing that stood out to me today.
Yeah.
We've talked about SMR technology a lot, right? Over the last year.
Mm-hmm.
We got into OKLO, but let me just give you a name that I saw. Um, and we've talked about this company as well because they kind of play in the same sandbox. But I want to give you this trade that I saw that really, really got my attention. This is a long-term trade, though. This is not something where somebody's expecting it to pay dividends overnight. Oh man, where is it? Okay, give me 1 second. I'm
All
looking,
good.
I'm looking. Come on, Wale. Oh, there we go. All right. March 20th, 2026. Somebody put 320 grand on SMR.
Mm,
The strike price that they chose is what stood out to me. They bought the 60 strike. SMR is trading at $36.
36. Yeah. That's way out the money.
That's way out the money. And that's in what? 6 months? No. We got October, November, December, January, February, March. Yeah, 6 months. So someone's expecting this stock to double in 6 months. Now, 324 grand is not a huge amount of premium, in my opinion, when it comes to looking at order flow. Anything over a million is what really gets my attention. But the fact that they're looking at the stock to potentially double, that's not something I would just glaze
Take
over.
lightly. Yeah.
Yeah. So 60 strike, SMR, 320, 2026 expiration. We will see. We will see. But someone's
That is
bullish.
an interesting trade. Yeah.
Yeah, someone's bullish on SMR technology. Someone is bullish on SMR technology. So we will see. We'll get back to we'll check back with this in March and see how that
Yeah.
trade goes. I'll
Yeah.
definitely be tracking it for sure.
I just added to my alert to see
Yeah. I'll
where we go
definitely
from here.
yeah, I'll definitely be tracking it. So and I want to also say this is probably our 50th episode on YouTube.
Wow. I didn't
So
even
I
pay attention, man.
I think this is our
That's
50th episode.
crazy.
So
Yo, that's crazy, man. 50. Oh,
yeah.
and there's another thing too. I was like, man, I was looking at this yesterday, and it looks like Netflix is actually trying to start their own podcasting shows where they actually like bring in different podcasts and stuff. So
Oh, okay.
yeah, they're trying to go into that space and start competing with YouTube. So I was like,
Hmm.
hey, I'm gonna keep an eye on that one. If sign us up or something. You guys might see us on Netflix, man.
But like I
uh,
said, if you guys enjoy the information, like I said, I you can check the receipts. We give good quality information. I'm not saying that we're
yep,
always right, but we give good quality information that you can
yep,
always, put to use. So yeah, if
yep,
you
yep, yep.
enjoy it, you benefit from it, like and subscribe, share, tell your friends, your family, and yeah, help us grow our presence so that we can keep helping more people and
Yes, sir.
simplifying the process of making quality investment decisions.
Yep. Pretty
So
much. That's all we're trying to do. We're trying to help you
that's
guys
all
with
we're
that.
trying to do.
Yep. Well, thank you for riding the market with us today. I can't believe this is our 50th episode, but we appreciate you guys. Everybody has been there for us from day one. We
Yep,
appreciate you.
yep, for
So
sure.
make sure you guys follow us, subscribe, share your show to with other people. Don't miss the next breakdown. Again, I'm Billy Clement. I got Wale with me, and we'll see you guys